Trevor Simpson, Associate Editor at Hotel News Now, and this is the Hotel News Now podcast. As the third quarter earnings season comes to a close, it's time to take a look back at the commentary provided by hotel brands and real estate investment trusts during their calls. I'm joined now by Patrick Scholes, Managing Director of Lodging and Leisure Equity Research at Truist Securities. Patrick, how are you?
Great, Trevor. Thank you for having me back on.
So prior to this earnings season, we talked about how there would be talks about the impacts of both the hurricanes that hit the Southeast U.S., as well as the impacts of nationwide labor strikes at hotels. Patrick, what did you hear on earnings calls, and what do you make of these impacts?
Yeah, certainly the hurricane and labor impacts were most impactful for several of the hotel REITs to various degrees. We saw a number of the hotel REITs take down their earnings numbers. The ones that come to mind would be Pebblebrook. Secondly, would be Park Hotels. You also had Sunstone, which had done it before earnings. And you also had Host Hotels, amongst others. Now, interestingly, what we didn't get a lot of detail on as it relates to these, one would be for the hotel REITs. Certainly there's that short-term earnings impact around, losing guests or groups, et cetera. At the time of the strikes, what still is a bit of an unknown, but we're starting to get a little bit more color about it, is actually what were the results of those labor negotiations, specifically the wage and benefit increases. And sort of I would say the chatter out there, and again, this is not really what companies have released, is, somewhere in the order of magnitude of around 6% growth in those contracts. So I would say it's probably more of what they didn't say that's more interesting. And then on the hurricanes, various financial impacts, a question remains, which I don't think anybody has an answer to right now, is what will be the impact come in property insurance negotiations. And, we probably won't know that for, another year. Certainly having some devastating hurricanes does not help when it comes to the next round of property insurance negotiations.
Right. And to provide some context, Host Hotels and Resorts said that they had 4 hotels temporarily closed, including the Don Cesar, which is still closed.
Yep.
And won't likely reopen until the end of Q1 2025 due to the hurricanes. And Park Hotels said that their Q3 RevPAR of 3.3% growth could have been as high as 5.7% if not for the hurricanes and strikes. So just to open it up more generally speaking now, what stood out to you on the brand calls?
Yeah. Why don't we start with Hilton here? One of the themes with Hilton was I think it was Chris Nassetta saying that 25 should look a lot like 2024. And that was also a theme, that we heard, I think, from Hyatt and I believe Marriott as well. That said, that's not a bad thing. 2025 looking a lot like 2024. This 2024 is a pretty good year for Hilton or Marriott or for Hyatt, between sort of low to mid, probably closer to low single-digit RevPAR growth, mid-single-digit net unit growth, lots of share repurchases, some EBITDA margin expansion. So it's, when they say that, it's not necessarily a bad thing.
Right.
So more of the same for, say, Hilton is welcomed. Other things that stood out, so you had some sort of idiosyncratic items. Certainly the best performer on the day of earnings of those major hotel brands was Wyndham. it wasn't that their earnings were, were so great that they were fine. It wasn't that their guidance went up so much, but it was more that I think this is the hurricane impact. Hurricane is definitely, it helps demand in hurricane impacted area, hotel demand. People need places to stay, and quite often they need them for many months. Um, and Wyndham had been a stock in this subsector that had been underperforming for quite a while. And the fact that, it does appear that RevPAR is turning positive year over year for them really gave a uplift to investor sentiment in the stock that day. I think it was up 10%. So that was a bit of a surprise that it was up up that much. But I would also say from this analyst perspective, I've been sort of surprised for some time that it had languished there um,
Mm-hmm.
for quite a while. Secondly, on Hyatt, I would say this was a bit of a negative surprise, or it was a negative surprise. They took down their net unit growth guidance by about 100 basis points, and that was because I think it was a combination of some openings being pushed into next year, and then they lost some properties through attrition, or basically they hadn't been meeting brand standards, and it came time to either get up to brand standards or leave this voluntarily or sometimes involuntarily leave the system. So that didn't really see that coming, that Hyatt was going to take down their net unit growth numbers. It certainly didn't help the stock that day. And then the surprise on Marriott was them calling out a big SG&A savings program. Again, from my seat, it's kind of hard to predict that type of announcement. We get obviously great transparency through Smith Travel data for RevPAR, but something like that doesn't exist for trying to forecast major company initiatives to cut costs.
Right.
So I would say that was what stood out on the brands.
Then on the real estate investment trust side, heard a lot about the transaction market and how that's opening up. What did you hear from that side, Patrick?
Well, I'll be honest with you, a little bit more of the same. And it's for the last couple of years, it's just seemed to me to be, one or two quarters out that it's going to open up. And, we heard that from a number of companies. I think one company predicted come the Alice conference in January, you're going to see a lot more transactions. I'm not saying it can't happen. I've just kind of heard this before the last couple of years. Oh, it's 3 months or 6 months from now where we're going to see it. I do think perhaps this time it might actually happen. We do have the sort of post-election or say the pre-election jitters. Those are in the rearview mirror here. Um, say what you want about the new administration, but historically, Republican administrations have been more pro business friendly. That probably would bode more well for more transactions or the underlying factors that would lead more to more transactions. So, it doesn't sound unrealistic that next year it might open up more. But again, I've kind of heard this story before, and it always seems to be 1 or 2 quarters away. Here we are.
Yeah, you'll believe it when you see it. I
Yeah, I
can
believe that
understand
too.
that.
I think this time is more likely, but I'm not gonna. I mean, I'm not betting the house on it either. So.
Sure. Yeah. Um, so sort of related to this earnings season, there's been a lot of mergers and acquisitions on the hotel management side.
Yeah,
How do you think this will impact brands and REITs moving forward?
good question. And I know that my team we asked a similar question, and I think on the Pebblebrook earnings call. I don't know if it's going to have that much of a difference. One thing certainly you've seen a much larger manage, side or management business out there now that arguably Hilton, Marriott have kind of move more, their growth strategies are more into franchising as opposed to growth through managing. I don't know if it's going to make too much of a difference here. If you're an owner, these brands might, or these brand managers might have a little bit more pricing power because there's just a little bit less competition out there. But as far as an earth-shaking change, I don't really see it.
Yeah. So we're about halfway through Q4 right now. So we're going to be coming up on Q4 earnings before we know it. Any predictions for topics of focus for those calls so far?
Well, I think you're going to get a lot of volatility for the rest of the quarter and weekly RevPAR results because you have a lot of either holiday shifts or election shifts. Certainly we saw some good results for the end of October because of the basically travel demand that would have traveled election week uh, didn't, and traveled the end of October, early November. And then I think the next data set coming out in a few days, which will be the election week results, it's going to be pretty soft here. Just don't do a lot of business travel during election weeks. Then you have Thanksgiving a little bit later this year. And then where it gets even more volatile is Christmas moving to a Thursday. I can't remember if it was a Tuesday or Wednesday last year. Actually, let me take a look at my notes here. You're going to have a pretty volatile end of or end of December, where the Christmas falling it's on a Wednesday this year.
Wednesday, okay.
Yeah, it's on a Wednesday, as is New Year's Day. That's really going to hurt leisure travel for the week of the basically the 14th to the 20th. You're going to see some really weak leisure travel. However, and the reason that is because last year many families had school break then. So you're not getting it this year.
Yeah.
However, that opens up a week for business travel and group travel. So you're going to have a really strong December for especially on the group travel side. So it kind of just depends on what type of hotel you own or what your REIT is more weighted towards. So December, if you're more group business, say Ryman, it's going to be pretty, it's going to be pretty good. Whereas say you're more leisure, it's going to be tougher because of that holiday shift. So that it's going to be pretty volatile December and even November here, given these elections and different days of Thanksgiving falls especially late this year. So that's going to make it more volatile.
All right, Patrick, those were all the questions that I had prepared for you today. Is there anything that you wanted to add?
No, I would say one thing that was interesting as well, that we certainly saw many of the stocks having tremendous. I think it was about a week ago, Wednesday after the election. Pricing in a couple things. Certainly there was fear out there that we would have possibly some degree of civil unrest here. That seems to be sort of off the table, fortunately. Whether you're side one or not, at least the positives are probably not going to have civil unrest related to this election, and probably a fairly straightforward, hopefully, transfer of power. May not have been the case if the other side won, but certainly a sigh of relief, if nothing else, that's probably not a likely scenario here. And then certainly especially the hotel REITs probably had their best day in a very long time on that Wednesday after the election because of that, and also for the reasons I mentioned previously. Thinking about perhaps a more business-friendly Republican administration. So.
All right, great.
Thank you. Good catching up. Thank you, Trevor.
Great to catch up. Thanks for joining the pod.
Bye now.
Hi, I'm Isaac Colazo, Vice President of Analytics at STR.
Hi, and I'm Jan Freitag, National Director for Hospitality Analytics for the CoStar Group. Tune in to our new show, Tell Me More, a hospitality data podcast.
It's a podcast on the global hotel industry, its current trends, what we're thinking about, and where the industry's going.
And we like to have fun with the data too. Find us on hotelnewsnow.com or wherever you listen to podcasts. Subscribe today.
Thanks for listening. This podcast was recorded on November 11th, 2024, and edited by Trevor Simpson. For the latest hotel industry news, check out hotelnewsnow.com every day.